Thank you, Mr. Kapoor. Thank you, Mr. Mukherjee. Our next speaker hails from the financial capital of the country, Mr. Nayan Mehta, Chief Financial Officer, BSE, who has an extensive experience of over 23 years in financial and securities market, especially in exchange and its ecosystem businesses. Prior to joining BSE, Mr. Nayan Mehta has worked with National Stock Exchange of India, Multi-Commodity Exchange of India, and Credit Analysis and Research Limited. Mr. Nayan Mehta is a member of Executive Management Committee and other committees of BSE Limited. He is also director and a member in various committees of BSE subsidiaries and associate companies. Sir, may I request you on stage, please? We're an enthusiastic audience. Let's welcome them with a huge round of applause. This one?
BSE, yes. Thanks. After Mr. Karthik and Mr. Mukherjee, not much is left, in terms of what you should really know about investing. Anyway, I'll continue with my presentation here. I'll only focus on few important points which I think, I want to communicate to you. One thing is this, that, I think most of the audience here is is from salaried background, I believe, and not traders, I believe. I believe you would be just, having a daytime jobs and, trying to invest something in part-time with whatever surplus you have. I have been working as a part-time, a full-time employee all my life, and there is always an urge to earn something more through quick investing. So your friend is a broker and he comes and tells you that, okay, you want to earn something. Okay, these are the scripts where you should invest. From time to time, all of us gets some tips. Okay, this is a good company. This is a good company. Many times they are right. That friend of yours who tells you that, okay, you should invest in this company, and whether you believe him or not, sometimes if the person is good enough, he gives you good tips. But the whole thing is this, that whether as an individual, can you sustain only on tips? That many a times what will happen is that you buy something on receiving tips, and that script simply goes for a toss after that. And when you go back to your friend and tell him, boss, you had told me to invest in this one, and I had invested and I lost money, he will tell you 3 other cases where you should have invested and where he was right. He says these things happen. The only thing is that you lose money when you invest. The other times, you would not have invested when you would have earned the money. So what is important, is that you should have a plan. Means what Mr. Mukherjee just said. You should have a plan as to how you are going to earn money in life. Mr. Mukherjee, pointed out, that, you can have good asset allocation. Asset allocation is a subject which, is not only about individuals. I have been reading some material where it was concluded convincingly that even when CEOs, chief executive officers of the companies, do proper asset allocation, they give superior returns to their investors and stakeholders. So for you also, you have to figure out, money is a serious matter. The money which you get, probably you end up investing or saving, say, around 10%, 20%, 30% of your salary. I don't know how much more you can save out of your salaries. But whatever you save, you need to be careful as to how you are going to really, invest the same, so that they are going to earn money for you. Being in stock exchange, you have got all types of asset classes where you can invest. It can be equities, it can be debt, it can be mutual funds, it can be whatever you want, in whatever manner you want. One thing which I have realized over long term, after seeing a lot of people, is that don't speculate. Don't go in for derivatives. You don't understand it. It doesn't make sense for you. Even though my exchange might be earning some money out of derivative income, but as a person who's standing with you on doing a financial planning, I would not recommend derivatives. Derivatives is not a financial planning tool. It is for, you can do some hedging, but that is, but that is something very sophisticated, which obviously you need to learn, and then only you do. If you don't understand derivatives, don't go and think that, okay, today this price is there, tomorrow I learn this much, nothing doing. Second thing is that if you are investing in equities, invest in companies with track record of more than 10 or 20 years. That company will not run away. That company will have good times, that company will have bad times. But if the company is good enough, if the management is good enough, the money will come back to you with good returns. Now suppose, that's why we say that, that's why I'm saying that, invest for medium to long term. Don't think that, today I have invested and, means my friend has earned 20% return or 30% return, or his money got doubled in 1 year. Good enough. He is lucky. He earned. We are happy about him. But that doesn't mean that, I am going to have a competition with him as to who earns more, who earns less. If you are a good investor, if you are a really good investor, even getting a 20% compounded return, which you can get if you are investing in good companies, that is more than what you would have, or almost as good as what Warren Buffett has earned. So don't try to be too smart. Be a normal investor. Invest in things you understand. In good company, if you don't understand things, just at least by gut feeling, these are good companies. Go in for the only good companies. They will have their own bad times, but you will earn your money. Another thing which, if you don't understand which companies to invest in, then I would prefer big mutual fund names. We all know what big mutual fund names are. There are 5 to 10 good mutual funds which are in markets. So go in for those mutual funds. Even in those mutual funds, there will be schemes which are good, there will be schemes which are bad. Go in for their flagship schemes. Every person wants to, preserve his flagship. So there will be some schemes where you will find the AUM is much higher and they are doing much better. Concentrate only on the good ones. Don't go in for bad ones. You will come to know a lot about flagship schemes and which are the good schemes. If you go through various sites, you can go through Money Control. There are some value research online which are about good mutual funds. You can really get to know a lot about it. Systematic investment plan is something which I vouch for. I have seen people earning good money in that. And whether you do it through a mutual fund or do it through some very good equities, where equity shares, good for you. You can do whatever you, don't go in for something you don't understand. Another important thing is compounding, which Mr. Mukherjee also had, suggested. Compounding is a very important concept. Your 100 rupees, if it becomes 115 after 1 year, and it becomes say 132 after 2 years, it will go on increasing, and that benefit is phenomenal if you are going to do a systematic investment. Now these are some standard, my main thoughts are over. These are some standard, blah blah. You should not deal with any broker who is not going to give payouts in time. If the broker doesn't give payout in 2 days after payouts, if he says, no, I am going to settle it on a monthly basis, if I am going to settle on a quarterly basis, nothing doing, you close the account. You deal with persons who are totally forthright, totally honest, and who do only correct things, These are the other points which, with respect to KYC, with respect to client broker agreement. See, always keep one thing in mind, associate yourself with the right people, the people who are, people who are honest, people who are sincere, and probably, they will really guide you the right way. Those for investors, again, any investment, whether it is gold, whether it is land, whether it is equity, whether it is mutual fund, risk will always be there. You will have to know that in spite of the risk, if it goes down, what is your level of comfort? Suppose you buy a mutual fund and it goes down temporarily for 10%, 20%. You should not lose faith. Whether you can do systematic investment plan or whether you can, wait out till it comes back again. So one important thing is that you should always be aware that there is always risk in what you are going to do. Even if you keep money in your locker, there is a risk. If you keep money in bank, there is a risk that it will not be able to match the inflation. So whatever you do, you have to be certain what you are doing. I would say that, okay, you see, people, life is all about taking risk. You take some risk, and probably, you know, if you have taken carefully, you'll probably come out much better. As Mr. Karthik has said, don't fall prey to unrealistic and guaranteed returns. There is no guaranteed return. If somebody is saying, I'm going to give you 20%, 25%, that's all nonsense. Please don't go for all that. Okay, now a lot of things are happening and a lot of avenues are opening up for investment. You have got mobile apps, you have got depository participants who are doing it through net. When you are doing it through internet, please be careful. As far as possible, have some antivirus installed in your computer. Don't do it through open Wi-Fi. Now open Wi-Fis are available everywhere. Please don't use it for financial transactions. I think they are risky in that case, because nothing is secure in today's world. When you are investing, please ensure that you try to get, your broker is able to send alerts. Today, stock exchange also sends some alerts. So whenever if you get some alerts which you think you have not invested, you should immediately, communicate with the broker, with the exchanges. As an BSE employee, I would like to say that today BSE offers the best exchange trading platform with a fastest speed of 6 microseconds. This helps, it is not very important for investors like you, but it just, it gives a comfort that technology is at its best. There is a BSE app also, which I would really recommend to all of you. It's a wonderful app, which will give you a lot of information from time to time. So I would suggest that you should download that app. Thank you.
Thank you so much, sir. May I request Mr. Dharmesh Kapoor to please present Mr. Mehta with a token of appreciation, please?